I'm going to break down Hawaii County's property tax rates and how to get the best possible tax rate coming up next. Hey, what's going on, friends? We're going to go through this week and look at the property tax rates and classes on the Big Island here, and also talk about the way to get the lowest possible property tax rate for your property and what it takes to qualify. So the first thing we're going to go through here are the property tax classes and what their rates are. Remember, these are charged on tax assessed value. So it's not charged on the appraised value of your home. It's not charged on the sales price. It's not charged on the Zestimate and Zillow, none of that stuff. It's what the county assesses it to be. In most cases, sometimes it reflects the market value, but in most cases it lags behind market value and will be lower, which is good news for you. You don't want to challenge that because you will pay more taxes if you get your property valuation increased. And so sometimes buyers will look at the property tax assessed value and then think they want to base sales price off of that. It's not a reasonable number to base sales price off of. So just remember that in the context, you are taxed on the county tax assessed value. That's where this tax is applied to. And this is a very confusing way of laying out tax rates, right? The tax rate is $1,000 net taxable value per $1,000 of net taxable value. That's like a mouthful. The easy way to figure this out is you just move the decimal point 1 point to the left and you turn it into a percentage. So for example, the affordable rental housing tax rate, if you move the decimal point one time to the left, it's going to be 0.615% of the tax assessed value. And so we're going to go through all of these and I'll talk a little bit about them and skip over the ones that you're not going to see very often. So the first one is the residential rate. So the residential rate is important because this is what all residences are charged if they have residential zoning and you don't have any type of homeowner's exemption, or it's not your primary residence. And so you're going to pay up to $2 million in valuation. You'll pay 1.11% of the tax assessed value. And then any portion above $2 million, you're going to pay 1.36%. So if you have a $3 million home, congratulations. You are going to pay 1.11% on $2 million of value. And then on that $3 million of value, you're going to pay 1.36% on that above $2 million valuation. So you're going to pay two separate tax rates. It's going to be higher on the portion that is assessed over $2 million. The apartment rate is 1.17%. The commercial rate is 1.07%. Same with the industrial rate. The agricultural rate, this is an important one to highlight because a lot of times people think I want to get the agricultural rate because it's going to be lower, maybe where they came from, it's lower. But in our case, the agricultural rate is not very much lower than the residential rate, and it is actually higher than the homeowner's rate, which we're going to focus on and talk a lot about here in a second. So the agricultural and native forest rate is 0.935%. And then conservation hotel, you're not going to see that very often if you are a regular consumer or regular resident, but it's 1.155% for those two classes. And then the homeowner's class is the one that we're going to spend the most time on, which is 0.615%. So it's significantly lower than the agricultural rate and almost half of what the residential rate is, but you have to qualify to get the homeowner's rate. This is not automatic. You have to do some paperwork with the county. You have to file an affidavit with them. And we're going to talk about what the homeowner's rate is and how to qualify for it. And then the other big benefit with the homeowner's rate is you also qualify for the homeowner's exemption, which also reduces your taxes even more. It reduces the amount of taxable value of your property, which then reduces your property taxes even further. So the homeowner's exemption is applied to a home that you have the homeowner rate on. And the first part of it is you get 20% of the home's value exempted up to $100,000. So if you own a $500,000 home, $100,000 of the value will be exempted. So you will only be taxed at $400,000 at that 0.615% rate. But if you are a senior and you qualify for additional exemptions, you even get more money exempted off the value of your home. So if you are age 60, you get $50,000 more exempted. If you're 60 to 64, you get $85,000 exempted. If you're 65 to 69, you get $90,000. If you're 70 to 74, you get $105,000. And if you're 75 or over, you get $110,000 in addition exempted from your taxable value of your property. So this is a significant amount of tax savings every year if you are in these upper age brackets. So make sure you're taking advantage of that. And these exact exemptions will not go into effect until July 1st of this year. So we're almost there. So you want to make sure that you, before June 30th, and I'll talk about the deadlines in a second, apply for these and make sure you have your homeowner's exemption so you get these when the next tax season or the next tax billable season comes about. So how do you know if you are eligible for a homeowner's exemption? There's 4 things that you have to do to qualify. The first one is you have to be the owner, obviously, or you have to be the lessee, and there has to be 10 years of the lease left on the lease in order to qualify to get the exemption. And you do have to file the exemption paperwork prior to December 31st or June 30th. There's 2 6-month billing periods, and you got to file it before the deadline to get it for the following billing period. So there can be a lag in when you get this new tax rate based on when you file and when the next billing cycle occurs. The second requirement is that you cannot get the homeowner's exemption in any other jurisdiction. That's state, county, anywhere else. And so if you're getting it somewhere on the mainland or getting it in another county, you cannot get it here. You must be in the property up to 200 days a year. So this is important, right? If you're spending 6 months in the mainland and 6 months here, or 6 months somewhere else and not in that home, you do not qualify. So you have to spend 200 calendar days in the home a year to qualify. And then you also must file a Hawaii state income tax return to qualify. On the flip side of this is the ways that you are not eligible. So the first 2 are a little bit different, have to do with rentals, right? If you are renting, even on occasion, or you're paying transient accommodation taxes, or it's a long-term rental, the property does not qualify. You will get taxed at the residential rate. The second one is if you are using it as a short-term vacation rental, you do not qualify. So you cannot get the homeowner's rate if you are doing if you have the short-term vacation rental permit, you will not qualify. So make sure that you're not applying for it if you're doing short-term vacation rentals, even if you're only doing it for 3 or 4 months out of the year, right? If you have the permit and maybe you live somewhere else, it's not going to qualify. The other 2 are just the opposites of what you need to do to qualify. The first one is that you cannot be getting if you have a homeowner's exemption somewhere else, or the second one is if you have not filed a Hawaii income tax return. There is a note here on the bottom about you can qualify a portion of your property if it's used for commercial or maybe home office use, but I'm going to let you go and examine that with the county tax office to figure out what you qualify for and what the requirements are there. I'm not going to advise you on that, so make sure you do take a look at that. So that's kind of the quick rundown of the property tax rates and then how to get a homeowner's exemption to get the lowest possible rate. But you want to make sure you're looking into this because it's not voluntary. We usually remind our clients when they close to go and apply for the homeowner's rate if they are going to be an owner occupant. But if you missed it and you missed one of those deadlines, it's going to be like a 6-month lag before you can get it. So you want to do it right away. So if you have any questions, you can always email me at dylan@buybigisland.com or put them in the comments below and we'll get back to you. Thank you guys for watching. I'll see you guys next week. Aloha.